All right, so here we go. Welcome to the Geek Group call. First, we have our disclaimer. Topics, properties, and investments discussed are for educational purposes only. We do not sell securities. Each investor is responsible for their own decisions and must evaluate investments according to their investment risk tolerances. Opinions expressed are those of speakers and no one else. And then moving to the introduction of our guest speaker tonight. Today's guest is Stephanie Walter. She is the CEO of Erbe Wealth, a capital raiser, indicator, and a real estate investor. She recently retired and sold her insurance agency of 16 years by following the key principles she teaches to professionals. She teaches professionals to unlearn what most of us have been wired to think about money and re-educating people on attaining lasting wealth. She is a gateway between professionals and well-vetted deals. Stephanie lives with her husband and young son in Colorado. Welcome to the Geek Group, Stephanie.
Thank you. Thanks for having me.
And then just so you know, you always have a chance to, if you want to hit me up for anything as we go, and it's kind of informal. We can talk back and forth depending on your presentation goes or if you need anything in there. And basically speaking, you got probably 30, 40 minutes to go through what you like, and then we can take questions, and that'll be about it.
So. Okay. Well, see, now I have to do something that involves technology. So,
okay.
We'll see if I can figure this out. Okay. So I'm presenting, I think a window, right?
Window, or sometimes it's easier to do entire screen.
Is that
window can work too.
Something?
Yep.
Do you see something that came up?
Yes.
Is it all the whole screen? It's just white.
It says capital raising, and it's got your logo there.
Okay, awesome. Well, I'm just try to minimize this so I can see people. But awesome. Well, I really appreciate you guys having me. I've met Max a while ago. We both kind of started with RE Mentor. I think did you sign up with RE Mentor?
Yeah, back in well, we didn't go through actual mentoring with, well, one of our group did. Paul went through, I think, and then Ben and I went to, I think we've been going to their presentation since 2016, I believe.
Yep. That's when I joined RE Mentor in 2016. But anyways, we reconnected at the last mentorship in Dallas a few months ago and just kind of caught up and let him know that I was, pretty much just capital raising now, and thought that, I could put something together that might be helpful for anyone that's really considering that. As a strategy in this world of syndication, because I can go over some of my story, but since now I started with RE Mentor in 2016, just kind of for 2 years, really just to get my education, and then from 2018 until just this last December, I've closed on 9 syndications and have $124 million of assets under management. And I believe that's because I raised capital. So back in 2016, I was a business owner. I was with Farmers Insurance. And I was invited to the boot camp that RE Mentor kind of advertises. You see it on Facebook every now and again, and went in there, and I learned, that was the first time I learned the idea of what a syndication was. And I mean, no joke, it changed my life. I'd never heard of syndication before that. I was 45 years old, and literally I was just hook, line, and sinker into this. I spent the next couple of years basically getting my master's in commercial real estate. I was a farmer's agent. I just actually sold my agency and retired this year. But I like to tell the students, because there's a lot of like, you try and try and try to get your deals, and I just like to let you know, that's, I think, what everybody goes through. My first deal, it was in just outside of Tallahassee, Florida, this really tiny little city called Perry, Florida. We got a 60 unit under contract there. And then once we started doing all the due diligence, we found out through the city that they were about to break ground on 200 units of workforce housing. So we exited out of that deal. The second deal I got under contract, that was in Fort Myers, Florida. I went down to inspect that one, actually paid for the inspection, and found out that it was just head to toe with mold in it, black mold. So exit out of that one too. So the third one, I just really wanted that deal. So my third deal was in Fort Collins, Colorado, which is where I am here. I closed on a fraternity house, of all things, in Colorado. I felt like I did all the due diligence, but I honestly did it all myself. But I closed in December 2018. Found out that the boiler wasn't running the way it should be. Had some frozen pipes within the first month I bought the property. But the biggest lesson I learned out of that one, I still own the property and it's been great ever since, but I never wanted to do another syndication by myself. So I really reassessed what I was going to do in this space. I had a coach at the time. I'm a huge advocate of coaches, and just was, feeling a little bit lost about what I wanted to do. Talked to someone within our group of RE Mentor, and her name is Jeannie Orlowski. If any of you guys are familiar with RE Mentor, she basically raises all the money for Dave Lindahl. And she knew of someone who really loved to find deals, but just hated raising money. And she was like, maybe you should call this guy and just see if your skills kind of align and all that good stuff. And so we met and realized that we really, liked working with each other. Found for me, it was necessary, and I think for most people, to find a partner who was better at doing the things I didn't like to do. So everybody, a lot of people ask, what have I done to raise money? I've done the gamut. Obviously, I think everybody starts with the friends and family, and I did that for my first two deals, but that runs out pretty quickly. But the pro of the friends and family is that's cheap. You don't have to spend any money to get their money. One of the first things I did when I started pitching my deals was putting together these beautiful pitch decks. Just, spent a lot of money getting things printed, looking super nice. It was terribly expensive. And now, that I have some time into doing this, I can tell you the things that are most important are getting yourself a professional logo. If you have a website, have a sentence that really defines your value proposition, kind of what your company is about. And then get professional cards. I'm sure that's definitely worth spending the money on. But the one thing that someone told me when I was being coached a few years ago is to have a professional email signature. It doesn't take much. Basically, just I have my picture, I have my logo, my contact information, and it looks very professional. and it gives, that investor the confidence that, you kind of, you're professional. Real estate conferences. I've got a lot to say about that. It's a great place to meet like-minded people. It's the best place really I think to build your team. Now, if you're a capital raiser and you've already built your team, it's actually, they're probably not the best places to go to raise money. And I'm still kind of working that out myself. I go to probably 2 or 3 conferences a year. But I am going to one in Dallas in, I don't know, 2 weeks, and it's a high net worth. So it's just people that go to this conference have high net worth. And so I'm also, there's, what you really want to think of is who is your ideal investor and where would that ideal investor be, basically. Buying leads. I have bought leads. I don't believe that is a good place to spend your money. I have never bought a group of leads where I was like, wow, I'm so happy that I spent that money. So if you're looking to build your database, that would be probably at the bottom of the list. Copywriter can be really nice if you've, you need a lead magnet on your website, or something that when you talk to people, you're like, go here and give me your, your email address and your name, and download this piece of whatever. So it's pretty cheap, actually. And if you guys do need a recommendation, I don't know if she's in the Multifamily Geeks, Max, but she's done some graphic design stuff for me, and she's really reasonable. I can send her information over if anyone's interested. But like, if you're putting together a webinar, if you're even doing a PowerPoint presentation, graphic designers are really helpful. And if you can find one that isn't very expensive, they're really worth it. The LinkedIn, I think Max was talking about that. I think that's a really great, valid way of finding leads and people to open the conversation with. I was listening to someone talk a few months ago, and he really dives deep here. So he finds, I don't know how many people, several people a week who he's interested in learning about. I know someone mentioned they had their own podcast. That's an excellent way to introduce yourself to someone, to just say, I'd love to have you on my show. But there's even things, this guy was showing us, you can find someone on LinkedIn, then go over to Facebook, see if they're there. You can actually find a lot of interests that people have on Facebook. They put a lot of stuff on their social media. So you can research their interests, what colleges they went to, just like restaurants people like, or whatever. And so I've had where, you just kind of, I've come across people that went to the same college I have gone to, and, you kind of just reach out to them and say, hey, I graduated from here too. I'm happen to be, looking for investors, or I'm in this space. Would you have like 5 minutes to talk, or whatever? And you'd be surprised how many people you can, get a conversation going with. And it really doesn't take a lot of research to kind of find what people are interested in and what they're connected to. I also had another one on LinkedIn that was a big Hawkeyes fan, and my dad was a big Hawkeyes fan. So that's how we kind of started the conversation with each other. Just something that's different and makes you stand out a little bit. But I've gotten great leads from LinkedIn. I've been coached from a capital raiser. Again, of all of the things that I've done, I think that, being coached is, for me, has been, I've gotten the most bang for my buck. Learning from someone that knows more than you do is just priceless. And so I've always tried to align myself, with people that know more than I do, and just kind of learn what I can from them. That one, that's probably not that useful. Hosting a booth at a real estate conference, I just did that for the first time. I did end up getting 3 people that invested, but I think largely with the cost of that, I mean, and the time, I think it could be worth it if that's the thing that you like to do. You got to be pretty on for the UP was, I think, 3 days. So you really have to be on and being ready to talk to people like solidly for, 8 hours a day. Oh, this is probably kind of what you guys are doing, just a mastermind. That was a great, very, very helpful to me, because it's just the little things like, oh, does someone know about a graphic designer, a copywriter? I'm running into this problem. That I think that's been hugely helpful for me. But the very biggest, I think what I have found to be the most successful at giving me leads and giving me quality investors, and there's no way that I can downplay this, is through podcasting. I don't have my own podcast. I'm going to start my own podcast this, hopefully in the first quarter of this year. But I was on about 40 podcasts last year as a guest, and you can call booking services that will basically find you don't even have to do anything. Of course, you have to pay them, but I think that that is definitely money well served. Who I used was Interview Valet, and they were super. The thing about when someone listens to you, by the time they get to you, they're ready to invest. There is no real question as to, because they've been listening to you, they feel they know you already. There really isn't a sale involved in it. And that's why I'm putting that time and the effort into getting a podcast together this year for sure. An intern, this is something a lot of people don't think of. I mean, for me, I'm a 1-person show. I don't have a huge company. So when I was approached by an intern last year, I was like, oh, okay, what will I do with an intern? But I can't downplay how helpful she was. I'm 50. I just turned 50. So I'm not great with technology. She is super, super helpful for so many things. A lot of business schools, they have to do an internship with someone. And I think this is a great thing if you can go and connect into a school, a business school that's near you, and just say that you're, looking for an intern. It's hard to do all of what you need to do to raise money by yourself. So I think that can be a great thing and very helpful. But I was just going to talk about the history of crowdfunding, which is really just capital raising. And basically, I don't know if very many people have heard about the Jobs Act. Back in 2012, it was when Obama was president, and it was a bipartisan bill that was passed that they basically intended small businesses. What they were wanting was that small businesses could go out and get funding. A byproduct of what happened was that it changed completely the way that we raise money. Prior to 2012, all we had was a 506B, and that basically restricted you to raising money with people you already know. I'm not sure if anyone has raised for a 506B yet, but if it's a 506B, you can't go out and tell people you don't know. You can't, it's only with people that you've had existing relationships with. So largely before 2012, these deals stayed in with the very wealthy. Basically you hear a lot of times this is like country club type of investing, because really that is how these deals were talked about within a group of maybe attorney, doctor, whatever. So in 2012 that completely changed because it allowed us to do the 506C, which let basically us be able to market our deals online to strangers. We could do general solicitation. And that has basically changed the world, because just in 7 years since these acts were passed, crowdfunding has grown. I kind of let that. I have a lot of got to talking, forgot I needed to keep clicking. But no, this is really fascinating. In 7 years, crowdfunding or capital raising, as we call it, has grown to represent 25% of all private equity capital raises for commercial real estate in America. And so it's a huge, huge change. It's a huge opportunity to be a capital raiser. And I can speak just basically to my experience. I was in your shoes where I was looking for deals all the time. I was underwriting hundreds of deals. And, when you're a capital raiser, someone has done all that work for you. They come to you with the deal that they have. So really your due diligence as a capital raiser is you need to, do the due diligence on the team, on their, track record and that sort of thing. But you are basically, when you advertise yourself and market yourself as a capital raiser, you're going to be surprised what kind of deals that come your way. And as far as a capital raiser, there are definitely legalities of how you need to be added as managing partner in that deal. But you get a very nice cut of the deal for raising money. So that's why I put a lot of my time and money and energy into just getting to be the best that I can at this, at raising money. I was just telling Max before that I was contacted by a woman who's looking to, she has a venture capital company. It's a financial tech company. It's hard to describe, but it's a banking application that basically is going to change the way that banking is done worldwide, actually, when it goes live. But she doesn't have any skills on raising money, so she can't get it over the finish line. So she had heard of me because she was in my database of clients, and she connected with me, and we've been talking ever since. I'm going to raise the money for her. The benefit is that I'm going to get paid very well, but I also think this is a really cool company, and it's kind of opened up the idea for me to, go into more of the venture capital space and look for companies that, kind of need help to get these companies out there and help people. So once you have those skills and you develop them, they're so useful. So basically, if you want, I'm sure you guys are on your way to starting, but I hear a lot about people talking about how big your database should be. What I think is more important is who is the investor that you're looking for, and how are you communicating with your investor? Because I can tell you that some investors who know me very well, They refer many referrals to me. And so, you know, having that relationship with them, getting people to know, like, and trust you is pretty priceless. I think you should always be building your database, but I also think you should be really focused on marketing to the investor, your ideal client. Everyone's going to tell you, and this was a big surprise to me, is that you need a lot of content. Yeah, content is king, as they say. You have to really put yourself out there as knowing, you know, kind of what you're talking about and letting your investors come to you for that knowledge. The website, you definitely need some kind of a functional website that has an item of value and basically a call to action. It's, you know, I think it's essential. And then from there to create an automated funnel, which really are, you think of your investor as starting at the beginning of the funnel. They don't really know you. And at the end of the funnel, they're ready to invest with you. So that really needs to be the strategy that you're coming at. I don't know if any of you guys have heard this terminology of who is your investor avatar. It's a silly word. I don't know why they use that, but it is hugely important. I just recently sat down and started answering all these questions about who I thought of, who is my ideal investor. Now I've, you know, had 8 deals, so I have several investors that come to mind. But it's really important, even if you haven't raised money or you don't know, you know, you can't visualize a person specifically, to basically really think about these things about who your ideal investor is. All of these things, the demographics are important. Just really to go through this whole thing and come up with an idea of who your investor is. And once you have him, then that is who you need to be marketing to. That's who your message needs to be going out to, getting this particular investor. I think that's in there twice. Okay, so this is the one I did. Don't mind the messy handwriting, but mine, I had 2 in particular that I was thinking of, but I just went through, you know, basically wrote all this out. I actually have it on the side of my desk so that, you know, when I'm writing things or when I'm, you know, coming up with a marketing plan, that I am thinking of who my ideal investor is. Here's one thing that I wish someone would have told me about years ago, because I can't believe how many times I've gone into an investor call and I haven't had really a script or anything, and we get on the call with each other and it's just like, hey, how are you doing? Great. You know, there's just no, you know, there really isn't an agenda to the call. And I can't tell you, out of coming up with an investor avatar and coming up with your introduction call or investor call, whatever you call it, it are the 2 biggest things I would tell you. Because as you're starting, like, I lost a lot of investors who I talked to maybe once, and I didn't really have this call thought through. And because I didn't really get to capture that person. So you just basically, I recommend, I have mine like written on cards for when I talk to someone. Today I was on Zoom and I had them up here just so that I can, because I chicken out, because sometimes you think, oh, well, they're going to know that I'm doing something, or, I'm doing something salesy. But what I can tell you is, for the call structure, there are specific psychological things to do. One is time block. Let the investors know that your time is scarce. Two, you have to set up the purpose of the call. You're taking charge of the call. That's really, really important. And three, setting expectations for at the completion of the call, so they know where we're going to go next. And basically, you're leading them down a path, is the way that I look at it. So mine always starts this way. I'm blah, blah, blah. I have a scheduled to talk from 2 to 2:30, and I have a hard stop at 2:30 for another investor call. So if it's okay with you, I'd like to just jump in, something along those lines. But that lets right off the bat, they know that your time is valuable. And also it sets the time that you're going to talk to them for a half an hour, and they don't have to wonder, oh God, how long is this person going to keep me on the call with them? I'm going to be, here forever. So that's the first thing. Then I said the purpose of the call is for us to get to know each other. I'm sure you're going to have some questions for me, and I'll have some questions for you. Is it okay for me to ask you some questions to get to know you better? They never say no to that. But that's setting the purpose on the call. And then I'm also setting the agenda for the end of the call. And at the end of the call, we should have a better idea if it makes sense to take the next steps to work together in the future. And if you don't think we'll be a good fit, I can direct you to some other companies that might work better for you. Does that make sense? That accomplishes the purpose of the call, but it accomplishes something even better than that, because you're telling them that if you don't think they're a good fit, that you're going to refer them to another company. Well, all of a sudden, just have someone do this to you. I mean, when you are getting sold something, really be aware of what people are doing. When people tell you that, you're like, wait a sec, why am I not good enough? So it psychologically puts them to where it's like, I want to, pick me coach type of thing. So I can't stress, I mean, out of everything, I think this is the most important thing. And then I go and then it's pretty quick. Like I had one of these today. You ask them if they're an accredited investor. I used to have a really hard time doing that because I'm not sure, like asking people about their money can be a little bit uncomfortable, but it's hugely important to find out if you're doing a 506C or a 506B. You have to know if you're dealing with someone that you can work with or if you're wasting your time. So the accredited investor, I ask about their experience. Is their money liquid? Is it ready to be invested? And then I ask what questions do they have for me? And then also the main thing they're hoping this investment will do for you. I think a mistake that a lot of people do in this business is they talk too much. So today I had a call with an investor who found me on a podcast, and I was very conscious of that they need to talk a lot. You're setting the agenda, but the more they talk, the more you're going to learn about them. And I could tell, like, after talking to him, kind of where his pain points were. He mentioned that he had 9 kids, and he had, he really wanted to have the preferred return was really important to him, or just monthly cash flow was really important to him. So if you just are quiet and don't like rush out and explain the deal in every way that you can explain your deal, you might be explaining the deal in a way that they don't even care about. But if you just ask a few questions to figure out where they're coming from and what they want out of the deal, you can better tailor what you're going to talk about with them. And then you close up the call. I let them know if they, if they qualify to work for you. You always have to define the next steps after that. Say, I'm going to send you, if you have a pitch deck, if you have a webinar, whatever, just always define the next step so that's not up in the air. I'm going to send you this. Is it okay if I follow up here? Or I forwarded a pitch deck today to someone and said, and when you look at it, then let me know if you want to go into our investor portal. And we'll touch bases, early next week. But it's just, important to have that set. Okay, the last thing, hopefully I'm on somewhat of a time, but this one, I never was taught, no one ever talked to me about this. And so I just think it's hugely important is, have you ever invested in this type of investment that you're, having other people invest in? I talk to a lot of people, and they say that maybe they don't have enough money. There's actually a lot of ways in which you could come in with a smaller investment. I did this for some women's groups that I was involved with. They each contributed like $25,000, and only one of them was accredited, but yet they all could participate in the deal. And I say that because I think we've been around this business. We see that a lot of people put money into their businesses, but they're not having any goals to invest themselves this way. And truly that's the way that you're going to get ahead. You guys have the education and the industry knowledge that exceeds probably 99% of the investors out there. For reals. I get talking to people like the guy today, not one question about like so many key things. Obviously our deal is a good one, I believe. But he didn't ask about fees. He didn't ask about holding times. He didn't ask about our underwriting. He didn't ask about anything. He's just, I like you. I'm going to put $250,000 with you. So what I'm trying to say is that you guys have a lot of knowledge, and that you may have spent money to get this knowledge. And that I think that if you can, you should put it to work. I wish someone would have told me about that. That's really my passion right now, is talking to people and getting them to invest this way in these alternative investments. Yeah, I think that's it. But does anybody have any questions? I really appreciate you giving me a chance to talk, and I'm very passionate about being a capital raiser and to letting people know the enormous opportunity there is out there for capital raisers.
And don't worry, if people don't have questions, I always jump in and start to pepper with some questions, and then it spurs some others on too sometimes. So
okay.
Yeah, so you're welcome, Geek Group members, to go ahead, raise a hand if you got questions. And in the meantime, if you guys don't mind, so you said something really interesting there in the beginning. You said you were sort of at a point in your multifamily investing career where you were doing one thing, you were out looking for deals, and then it kind of wasn't working for you, and you sort of pulled back and reassessed and made a shift and went in a dip. You stayed in the industry, but you made a sort of a shift and went in a dip direction, as in going toward the capital raising side. Maybe, you and I have been in this business now 5 years, which seems like we're dinosaurs, given how quickly sometimes people come and go and get frustrated with how difficult the business can be. Maybe just talk about that one more time, about how that worked, and maybe how you were feeling at the time. Were you frustrated at the time? Were you thinking you had to get out, or it's not going to work for you? Or were you going through sort of those normal human emotions of, wow, maybe I spent X amount of tens of thousands of dollars to learn this, and now it's a waste? What was going through your head at the time?
That's exactly it. Yeah, I'd spent, I think 39,000 was the investment with RE Mentor, and I felt I didn't like it either. Like I couldn't figure it out. Like I didn't like doing the underwriting. Like I would take deals home and look at them at night. I didn't like the commercial brokers. I still to this day do not like commercial brokers. I think they lie like, no one's business. And I hate that. I hated it. And yeah, so to just take a step, I wish there was a bigger picture I had to say that I knew what I was doing. I just knew I wanted to do something different. And my background was in insurance. And so I kind of had that model of being an agent and advisor to a client. And that was really familiar for me. The, growing your database and all that other stuff. I have failed in so many times doing this, but that's kind of what this business is. But what I do love about it is I get to work with really amazing investors, like investors that they have amazing stories. And a lot of them, the ones that I'm getting involved in venture capital groups now, they're doing a lot of really amazing social investments, to really make lives better for people. And I'm a huge believer in building your wealth through real estate. There's, that will always be the basis of what I believe in. But to find your space as a capital raiser, I just can't state how that gives you a lot more freedom to pick and choose the types of deals you want to work in, rather than, looking and trying to get them.
Nice.
I have a
Okay, that's awesome. No, go ahead.
This is Mary. So you say you did the booth, right?
Yes.
I'll turn my camera on. So what? Because you got to the booth. So did you tell them what kind of deals you was doing while you was at the booth?
I did. Yep. Because we had 506Cs. So I just, printed out kind of like a page of like what we've done in the past and what our returns had been. And definitely I put like a little, I gave away a Bose like noise canceling headsets. It was about $300, but that prompted a lot of people to come over and give their cards because we said we were doing a drawing. So it added about 100 people. Yeah, I'd say about 100 people to my database. And that's a lot of people would say that's worth it in itself, but I did end up getting 3 investors out of it. If you have that type of personality, again, my intern, I asked her if she wanted to come out and help me, and I just paid for her hotel and her hotel and her flight, and she was more than happy to come. And she just thought it was just great experience for her. And then it wasn't just me that was stuck at the table. But no, I think it's for the right personality. That's an excellent way to build your database.
I got a couple more. I'm sorry. LinkedIn, I was on a call actually, I think this Monday. And the guy, I got his name information, but he was talking about where he was connecting the investors, getting investors through LinkedIn. And he had a system that he do. I'm gonna find out about it. I wrote it down. And he was like teaching the class how you get the investors off LinkedIn. And he said he does really good with it. And one more, I had this guy send me when they do get ready to do the due diligence for the property. So do you raise money for a trust?
I raise money for the LLC. So the people invest with me from their trust, like an investor will invest from me with their trust, but I'm raising money for the LLC that we create in the syndication. The other one that you're talking to me about, LinkedIn, just be like very, and I'm speaking from experience because I've wasted a lot of money on a lot of things. So I would definitely, whoever that is that's doing it and whatever they're telling you, just see if you can get some, see if what he says is true. If you can get some referrals, maybe run it by this group and see what they think as far as like the cost as what they're promising you. I wish I would have done that on certain things, but there's so much money to be spent in this industry for sure.
Okay, thank you.
Sure.
Yeah, and I think just for context, Mary and some others on the call, I think that booth you had was at the Ultimate Partnering just previously 4 months ago or so, where I think at least 4 of the people on this call were actually at that event.
Yeah.
So, yeah. I think, and I kind of reconnected with you at that booth. So I think there's some interesting things to that. And I go to a lot of shows and I see people at booths that I know in the industry from all different groups, and there they are at the other group in a booth. So, okay. Let's see, a couple calls. Let somebody put one in the chat. Cabrin says, currently, are you ever doing any underwriting or deal sourcing, or are you solely a capital raiser?
I'm solely a capital raiser. Yep. I'll underwrite, if a deal is brought to me and I need to underwrite it to determine part of my own due diligence, but yeah.
Okay, nice. Thank you for that, Cabrin. And welcome, Cabrin. I saw you come on there, so nice to see you. And David, too. Welcome, David, also. Okay, Charmaine, you've got a hand raised. Go ahead, ask your question.
Yes. Hi, Stephanie. I was one of the names you got at the UP. I remember you even calling me back after a while. So, yes, I'm thinking about when you have your deals, you have your GPs and your LPs. Can you tell us about how much or what's the least amount of money will people invest in your LPs?
Well, we have in all of our documents 100,000 is the least amount, but it irritates my my partner. But I do tell people when it's their first time, I'm like 50,000. Then I had someone the other day be like, well, what about 25,000? That's very, very, very rare, but I will do it because because here's a way that I learned this at UP. Structuring your deal to have larger preferred pay to the higher investors. We did that on a property we just closed in December, and which just means that if anyone 100,000 or less gets paid 7% preferred return, anyone that invests 250,000 or more gets an 8% preferred return. I've never raised so many 250,000s. When that's on the table, that seems to be somewhat of an incentive for a larger investment.
All right, thank you.
Sure.
Yeah, and just on that note, we'll have different buckets. Like right now, we have $5,000 sitting in MFG that we want to put in a property. So oftentimes it'll be a min of 100, and we'll say, "Will you take 25?" and we send it over. We've never had anybody send it back, and it's just a limit of that bucket's got that amount of money, and this other bucket over here does, and so we'll do different things. So, Yeah, a lot of times those min amounts scare off maybe new investors, but I agree
No,
it's
that's where
flexible.
I did come up, or I have a women's group out here I just spoke to, and just was like, again, that idea of each person putting 25K in, creating an LLC where you each own a quarter of it. And boom, in 3 or 4 years, our properties right now are returning. The one we just closed on is returning 25% a year. So in 4 years, you'd have doubled your money. Now you have 50,000 to invest. And for me, I wish I wouldn't have waited so long to start investing, but I did have it once I started doing these investments. I did have some rental properties that I could sell. And my goal was for every property I closed, I wanted to be an investor. And that has largely helped me retire, or whatever I want to call what I'm doing now.
Yeah, we're open to both. If we can get in on a GP of a deal, we love it. If we can sponsor it, we love it. But we've been in on LPs all along, and we're still looking for more right now because we get, tax deductions from the depreciation, et cetera. So we're always kind of looking for all aspects of the multifamily deal we can come in on. Okay, so let me ask you a few more questions. Anybody else, raise your hand if you want to jump over me, because you guys get to ask questions ahead of me. But if not, I've got a couple more. So you said you were a huge fan of, and I missed the word you used. Maybe use the word mentoring or coaching or having advisors. Maybe give us a rough list, nothing extensive, but maybe a ballpark list. What are some of the mentors and advisors you've hired over the years? And maybe a ballpark amount of, I know my number of how much I've spent, but I got to be honest, these people have changed my life,
Yeah.
So, and maybe how you've gone about finding them briefly or something along those lines.
Yeah, well, the first one was RE Mentor. So that was 39,000 for that year, but that was, it had to be done. For me anyways, because you just had to learn the underwriting and all that stuff. I met Jeannie, who introduced me to my partner, Vino. So that to me is kind of priceless, because had I not met Vino, there's no way that I would have been, I would have never been at, 8 deals closed with him. Like there's just no way. So that was priceless for me as far as connections. That's why I was saying to go to real estate conventions are great to find your partners. But then I met a man named Brian Ellis, and I met him at Adam Adams. They had, I can't remember what their conference name was. It was right before COVID. I think it was in 2019. Maybe. And he was advertising a 2-day class, and I took that and then joined his coaching. I coached with him for 2 years. I just signed up for a 3rd year with him. And so that his is $25,000 a year. And again, for me, it's worth it, because what he does for a living is he's a marketer, and people come to him, syndicators come to him at the last moment when they need, like millions, can even be like $10 million they're short, which they have to raise or they're not going to close. And he's the guy that delivers it. So he's just kind of, I don't have enough good things to say about him. And then every year I've wanted to get another one, and I'm working in a 12-week course right now with a guy from Beverly Hills. His name's Adam Gower, I think. And he's, I'm 2 or 3 weeks into the class. It's pretty fantastic. And that was 14,000. So yeah, it's painful.
Nice. I'm adding up 75K for 3 years and then a 39K in there. So you're over 100, and then a 14K. And that's, I think in my lifetime, it's like $200,000, $250,000 somewhere in there. And I do count my When I don't hire a person and I lose the money on my own because I'm not smart enough to make it work, I count, there's an expression in our industry that you just paid for a seminar. You just paid for one no matter what. So you might as well have hired that coach in the first place. So I think we start racking it up. But I hear you. There's money to be made in this where it becomes worth it. And I think the professional growth is part of it. So Cabrin's tossing in. Oh, it disappeared. Please hold. Cabrin says, what kind of follow-up systems do you have for the contacts you collect or investors that opt in?
That's a great question. And that is definitely an area that I am lacking, and why I went to Adam Goer, because he's creating a funnel. There's a lot of people out there. There's if your CRM system is on ActiveCampaign, there's a guy named Jason Wright that will set up a very intricate like follow-up system with your clients for, I think, like $2,500 is what he quoted me. That's where I really have kind of dropped the ball in my money raising. Up to this point, I've just, I keep in touch. Every time a deal comes through, I try to send, a group email out, a couple times a month, and that's just not sufficient. My database is about my database, I think I looked today, it's like 850 in my own private email, but I've raised after this deal here, I've raised $8 million from and that was actually, I wasn't always at 800. That was, from the beginning of my career. So, and it does go faster and faster, but what is absolutely essential is having a funnel, which that's the only way that I'll get to the next level. And that's, I wish I had better advice on that one.
I got one more. For crowdfunding, are you already raising the money for?
Yep. Well, at this point, I have thought of, because another thing that I didn't go into as an opportunity for people is creating their own fund. Now that's a really valid thing. Like, I've been tempted. You can put together like a $5 million fund, and you get the money raised, and then you go out to all the operators and stuff and say, I have $5 million. This is what I want out of the deal. This. And then you're really in the driver's seat there to invest the money the way that, you'd have to tell your investors that you're looking for value add deals, that roughly this is what we're looking for to put the money in, and you can raise to a fund. But I raise, so far in my career, I raise deal by deal. So as soon as I get a deal, I raise for that deal. That I'm getting kind of tired, but because it's been a steady stream of deals in the last couple of years. But it again, as my mom had told me, that I don't have to take every single one. I can say no. I just haven't yet.
You don't mind me asking, the percentage of you just raising money is 3 to 5, or how does it work?
I always get 30% of the deal, and so and that's 30% of the management side. And as far as the legalities go, if you would want to just become a capital raiser, technically you can't raise money and say, I want you to pay me 30% of the deal and then I'll raise for you. If you ever get into that, you'll have my contact information, and you can reach out to me. I can tell you who. You just have to structure the deals a little bit differently so that you're compliant with the SEC. But yes. I have heard where people get paid more, but the funny thing is about this venture capital one is I'm either going to raise $300 million or $4 million, and the lady, she already has said that she would pay me 10%. So that's, I'll get paid $300,000 or $400,000 for raising that money for that venture fund deal. So it goes all over the place.
Okay, so I know, right? Do you be part of the equity in some of this?
I'm a managing partner. Yep.
Okay.
So I'm 30. Yeah, I own 30% of the managing.
Okay.
Yep.
All right.
Yeah.
It's good.
You should think it's a great way to make a living, I think.
Yeah, and 30% of GP is the way we might say it, right?
Right. Oh, I'm sorry. I said managing. I'm sorry. I say managing and limited partner, but right. GP, LP. Yes. So I'm 30% of the GP.
Nice. And then, so can you give us a list maybe quickly of the conferences you went to in the last year? Off the top of your head, nothing total complete, but just what you.
Well, I went to the UP one. I went to a dentist conference. I went to an insurance conference because in my past life I was an insurance agent. That was pretty much it because it was pretty slow this year because of COVID, or last year because of COVID. But now that I have my little avatar and I'm really focusing on, repeating my very best investors again and again, I'm really going to put some thought into where those investors would be. And I just mentioned this to Max that I was going to attend a real estate conference in Huntington Beach or wherever that was in California. But then my coach was like, who are the types of people that are going to be there, and then we sort of really talked it through and everything. And that is not where I'm going to find my investor avatar really. So yeah, so that's sort of why I backed out of that one.
Okay, very interesting. And all this is awesome. And I totally appreciate the direct answers that you're giving us. Thank you so much for that. Go ahead.
Sorry. Stephanie, do you work with or deal with family offices?
I haven't yet. I have not yet. But there's a couple. I am going to go to this. It's called a high net worth event in Dallas. I'm sorry, I don't remember that's the one I'll be going to in a couple weeks. I can email you guys the name of it, but yes, so I am going there specifically to meet either some very high net worth people or some office. Money, I have never worked with anyone with. All I've done is I have gotten, my individual investors, but I can tell you that it would be nice to find someone who would give you like $1 million or $2 million. But I'm also actually going to an event again next week in Denver, and it's like a networking event for people that have money. So I think there'll be some family office money there too. I'm also looking for debt, which I have not done before. Yeah.
Okay, in the interest of time, one of our big parts of this meeting is we end on time at the bottom of the hour here. So we got about 3 minutes left. So thank you so much for all of the information. If everyone would unmute and start to roll back to the group document and scroll down to we do this thing, Stephanie, from Traction called Rate and Wrap. So the way the system works is you're not rating the person, but the meeting. If you're a 7 or below out of 10, you get to say why. If you're an 8 or above, you just say your score. And then the whole purpose of this is so that your team members don't leave the meeting sort of with something still on their chest. You know how every once in a while you leave a meeting and you didn't get to say what you wanted to say, and while you can't address it right now, but later you can get back to and go, okay, somebody mentioned this, we better go back and address that later.
Okay.
Okay, so they're typing in their names and their scores right now. Okay, Pedro, what you got? Everybody unmuted?
I got 9.
Nice, thank you. Dave?
I got an 8, even though I came a little late, but I give it an 8.
Because it rhymes with 8. 8 rhymes with 8. 8. Darnell?
9.
Nice, thank you. I give it a 10. Larry?
10. Very nice.
All right, Charmaine, you able to say?
Yes, I give it a 10.
All right, nice. Cabrin, you able to talk? Okay, different times you'll see. Oh, Cabrin says a 9. I see it, sir. I got it. Cabrin's a 9. Thank you, everyone. Anybody I missed?
I'll give it a 9.
Nice. Thanks, Mary. Appreciate you speaking up there. Anybody else I missed? Okay. Well, thank you so much, Stephanie. It's wonderful, and I appreciate your story. I appreciate, talking about the struggles, and it's very inspiring. And I hope we can take something away and keep moving forward ourselves with this. So, all right, you guys, 6:29. Stay well, everyone.
All right, thank you.
Oh, and by the way,
have a
Stephanie's
productive week.
Yes, thank you. And Stephanie's information is already inside of AnthroBank. If you haven't logged into that, let me know. Her website and contact information and phone and emails in there. Okay?
Thanks for
All
putting
right,
it together.
thank you.
Thank you guys for being here. Thank you so much. Okay, bye.
Good night.